Hello everyone, welcome to my presentation. My name is Mukhammed Yusup and my instructor's name is Sarsen Waizada. Today, my presentation is analysis of oil and gas industry life cycle. My analysis to this book called Short Guide Summarizing for the Oil and Gas Industry Life Cycle for a non-technical audience, written by Emily Darko. So this book consists of 15 pages and I made an analysis to it. So before I start my presentation, first let me share with you my outline. My outline consists of 5 parts. First is 5 phases. Second, I will talk about key roles or actors of oil and gas industry in upstream. Third is influencing factors. And the next one is industry flow to host government. Finally, I will talk about non-revenue benefits to host government. So let's start my presentation. So those who work for oil and gas industry, they well know about 5 phases. There are 5 phases in oil and gas industry. First is exploration process. It takes 1 to 5 years. In this process, in this phase, we start exploring for presence of hydrocarbons. We cannot start drilling process without exploration because exploration allows us to find the presence of hydrocarbons. Without it, drilling would be for nothing. After we find an oil, after we done an exploration process, we can start appraisal phase, which takes 4 to 10 years. In this part, as I understood, we prepare documents, we pay taxes, and we also, we prepare everything for the drilling process, but not well site preparation. In these 2 phases, in exploration appraisal, we don't get any profit. Instead, we put all our investment, all our money into these 2 phases. After we finish exploration appraisal, and then we can start development. It is where we start our drilling process. It takes 4 to 10 years. Year or time is depend on this, how much oil our reservoir has. If our reservoir has more oil, then it will take more time. If reservoir has less amount of oil, then it will take short amount of time. In this process, in development phase, we start our drilling process. After development, we start production. It is where we start getting our profit. In production phase, we get our profit. It takes 20 to 50 years. And again, it depends on how much oil our reservoir has. So in this process, finally, we'll get our profit. After we produce oil, we should start with abandoning our oil field. And this phase takes 2 to 10 years. In this phase, we get only less amount profit, but however, we mostly put our money into it to clean up after we finish all this drilling process and production process. So these are the 5 phases. And these 5 phases they were included in the first page of that book. So next page, one thing to note that if he's written that if we unsuccessfully do this both 2 first phases, exploration phase and appraisal phase, we won't be able to reach other 3 phases: development, production, abandonment. In order to reach these 3 phases, first we should successfully do these phases, because without them we cannot reach these processes. If we find no oil, then we cannot drill. We don't have to drill that place. So next page is about key roles or actors of oil and gas industry. So here there are main 4 parts. The first is state, second one is oil industry, third one is supply chain, and the fourth one is community. And they are also divided into many parts. State, for example, includes national government, a local government, and national oil companies. All of they have their own duties and their own functions. Second is called oil industry. Oil industry includes contractor, operator, NOCs, and IOCs. IOC, which is International Oil Company. And the last one is oil and gas industry associations. Third one is supply chain, that includes international companies, local companies. And fourth one is community, which includes local community, local national CSOs, service providers, international NGOs, watchdogs, and development agencies. So all they are the main key roles, starting from state to community, or key roles or actors. And then next, let me move to the next one. Next page. Next page is influence factors. As we start drilling, there are some factors that will affect our production, that will affect our profit, our company, and all our processes. They are, first is physical factor. Physical factors include depths and the geological location. As we drill deeper, the more troubles we might have, because deeper we drill, the higher the pressure will be. And the geological location is another thing that affects our production, drilling process and production. And the next one is social and political factors. Social and political factors, they include government capacity and behavior, community response, company activity, and engagement. As you know, land is not our property. Land is a property of the government. So there might be some factors that affect our process, and these factors are from social and political factors. Third one is business coordination factors. So all of these factors, they affect our process. So next is industry flow to host government. As we're drilling the property of the government, we should pay some taxes, and it's called industry flow to host government. We should pay, here's written, license fees, VAT, payroll taxes, custom duties, sales tax, personal income tax, meaning that there's a revenue flow to government from our oil and gas company before oil is extracted. And it's done until we abandon our well. So which means oil and gas companies, they have to pay taxes, not only one tax, there are several taxes to the government. And here are the common types of taxes. For example, bonus, fees, state share, royalty payments, income tax, custom duties, property tax, tax on repatriated profits. So as you can see here, oil and gas companies, they pay many types of taxes to the government. So let's move to the next part. Here we have non-revenue benefits to host government. Before this page, I talked about the revenue benefits, which means our government gets money. And this part is non-revenue benefits, which means government doesn't get money, but the local people who live there, they get benefits from the oil and gas company. First, the job creation of local content. If oil and gas company finds an oil from a certain place, and that certain place, people will work for that company, which means it creates job opportunity for the people who live there. For example, in Atro region, we have close to Kosari, which is my town, we have Tingis field. And this thing, thanks to the Tingis field, a lot of people from Atro region, not only from Atro region, from whole country, whole Kazakhstan, they're working for Tingis, and they're getting salaries from it, thanks to their work. And so which means that oil and gas companies, they create job opportunities for the people. Second is infrastructure development. As oil and gas companies, they drill and produce oil, you should have roads and other stuff. So when they abandon the well, they will left roads and other stuff. So it is infrastructure development. And the third is local investment. Oil and gas companies, they invest their money to local people to develop some certain things. So as a result, I decided to conclude my presentation with this picture, which was staying in the end of the book. To be honest, I did not understand this graph because these colors, they don't match each other. Here we have activities are here, As I told before, 5 activities: exploration, appraisal, development, production, and abandonment. We shall close. As I told before, in exploration appraisal, we don't get any profit, and it's written here. Here's written no profit, but high expenditure. Here we invest our money, but we don't get any profit. In development phase, it's where we start our drilling. And production, here we have cost recovery, is written that cost recovery across production phase and profits generated. In this part, which is a longer part than others, we start getting profit. And here we have closing or abandonment. We have limited profits, but high closure costs. So it is all. Thanks for watching. Thanks for your attention. Goodbye.